Hi everyone, Brian from Bearable Traders here. It is Saturday, October the 1st, and it's the start of the last quarter of 2022. So this, of course, is the weekend video. We'll take a look at what happened last week, how we ended the quarter, and how things are looking going into the last quarter of the year. So hang on. And let's start out with a quick week review. The week of September 26th. Markets, of course, headed lower. We did have a bit of a rally one day, but really headed lower again on continued inflation recession concerns. Friday we had that PCE number come out. It showed inflation continues to run hot and higher than the expected number. And of course, Vice President Brainerd reiterated they still remain hawkish and there's no signs of any kind of accommodation in the near future. And pile more on top of that, there were negative reports from Nike. Lots of buildup in inventory. CCL came out with poor guidance on Friday as well, and that didn't really give the bulls any kind of confidence to step in and buy. And so we were down again on all the indexes on all the entire week. And you can see here pretty much 3%, except for the IWM. The small caps seemed to manage not so much of a loss, which was kind of surprising. But anyway, that's the way the week ended. Energy and basic materials, they ended up on the week. Of course, there was the talk about Russia banning Russia from participating in the metals exchange, so that drove price of materials up, like copper, temporarily. And of course, funny, one of the safety trades that everyone's been in, utilities really took a hit on the week. Real estate and tech stocks were the biggest losers on the week. 10-year, it kept going higher. We're at 3.83 now. The 2-year edged higher, not very much from the previous week, but it's now at 4.3. Of course, the curve is still inverted. U.S. dollar was just on a tear, and finally we've seen a bit of a drop, 0.6%, but that's small after the 3.13 gain we had in the previous week. And Bitcoin still hanging around 19,000, still seems to be hanging in there. And so before we get looking at some specific charts here, as always, I'd like to do a quick book ad for my books on Amazon. This is my latest one, Profiting as an Active Trader. Money management, rules, strategies, and routines of an active stock and option trader. And if you're a little bit newer to the game, there's always my How to Swing Trade, a beginner's guide. So take your pick. So let's get on with looking at some of the charts of the indexes. And as always, we like to start out with the treasuries. You can see here the 2-year still in an upward trend, still climbing, although it's looking a little toppy here and maybe due for a pullback. And again, 10-year, same thing, bit of an indecision candle on the weekly chart, but we are up pretty close to significant highs from well back. So again, maybe a little bit of a pause, but we did almost touch 4% this week. The transports, again, a pretty bad week overall. You can see it was pretty volatile. Monday we had a nice little rally, and then Thursday, Friday we pulled back. So again, still looking like this 12,000 level might be a place we could hold. So bottom line, this could be a double bottom, but we shall see. I do expect that we might just get a bounce tomorrow, or I should say on next week, Monday. And we'll just take a look here at the weeklies. Again, we're right down to an area. You can see when we go back out in time, you can see here, this is why we are finding support here. This was a prior area of support. This is where we broke out from. So again, this 12,000 area, fairly critical for the transports. The Dow, again, another terrible week, making new lows on the Dow. Let's take a look at the weekly and get a better idea of where we could be going. And you can see here, this is an area where we had prior resistance before a couple times and then gapped up. So we're kind of into this range right now. Again, looking at this area, we're probably going to find some support. and maybe find a bounce. But again, be careful that these bounces in a bear market often result in lower lows. The Qs, again, same thing here. We made a fresh low from the June. We were watching these June lows. June lows didn't hold on the Qs, and we're seem to be heading even lower, and we've lost this 200-day moving average as well, which is pretty critical. So if you go back in time, again, here's another area where we could see some support, this 260 level. Maybe we retest that, or we test that next week. But again, we are really oversold here. But obviously we can still go lower. Stochastics, MACD, RSI, not really showing too oversold on a weekly. Again, the SPY, new lows, broke those June lows as well, which everyone was watching to see if they would hold. And on a weekly basis, again, here's an area where there should be some pretty significant support. This 248, the 200-day moving average could also be some support, but somewhere in this range we could be heading down to on the SPY. IWM, like I said, it was the most interesting index because it did manage to hold up the best. You can see here we had quite a range day, big range day of trading. And again, we're back down testing these June lows here on IWM, but they do seem to be holding right now for the time being. The VIX, again, we are right back up into this. We got pretty close to this 35, 36 range on the VIX. Again, this is kind of a sign you get up that high. It could be a sort of a capitulation. Maybe the selling could be done for a little while. UUP, the dollar, again, massive move up, and now we've had a bit of a pullback over the last couple days, getting a bit of relief there as some of the other currencies and central banks raise rates. Dollar drops a bit. So Bitcoin, again, Bitcoin just holding 19,000. It seems to be pretty stable in this range right now. 19,330 as we're looking at this. Okay, so let's take a look at some stocks I'm watching. Mentioned last week that this 150 level on Apple was pretty critical, and watch that, and that would give you a good indication of where the market was going as well. And you can see here, I think it was Wednesday, we got a downgrade from BAC, Bank of America, and it seemed to hold up. It got down below 150, tried to hold and get back above it, and then Thursday, Friday, just a hot mess, selling off. You can see here the big volume days on all three of these days on Apple. So now where are we going with Apple? Could be heading back down to this 135 level. Could be a good entry if we do get there. Certainly 130, this prior level here, would be an excellent entry on Apple if it did actually get that low. But you can see here we are getting pretty oversold here on all the momentum indicators. I'm still playing with this one, AVYA. You can see here it's actually sort of ignoring what's going on in the market. We had a big pullback on Thursday, but then the thing bounced right back here. Friday, a big down day, but this held up pretty well. So still, I got back in it and just sitting around where I got in right now, 150, 59-ish area, 157. So I'm looking for this one maybe to have another pop. I did sell some at $2. EWG, again, this is something I'm just watching here. If we start to see some long-term sort of bottoming here, or maybe possibly it start to break out, this could be a good longer-term play. EWG, Germany, ETF. Something I noticed with all the Chinese EV stocks, they all seem to, Friday being a big rout day, they managed, stocks like NIO managed to actually finish green on the day. So next week there's a auto show. NIO is putting on an auto show. I believe they're introducing 3 new vehicles at that auto show. So could be a catalyst to move NIO up next week. RCI, I'm just hanging on to this one. I just sort of view it as a longer term trade, and also it's paying a decent dividend right now, and it's fundamentally it's I think it's pretty oversold. The PE ratio on it is down around 11, so I think it's one of those ones you can hold for a year or two, and you'll be happy you did. Um, Solid earnings performer. SQQ, I did get long SQQ after this big this big drop. This is a negative. This is a bear ETF, and still holding some as we. But I get a feeling I'll probably bail out of that on Monday because I think we're due for another reversal. Tesla, again, this sort of 260 level to me looks pretty important, and I'd be watching for that to hold. If we don't hold 260, 250 could be the next area of support where we kept trying to break through, and then finally did break through there. So 250 on Tesla, 260. UNG, natural gas seems to be holding here. I'm just kind of watching that. We are range bound right now between 23 and 24. A break either direction could either be a short or a long. And I'm still long some uranium because I still think uranium has potential as a green energy source until we can get some other type of energy sources, green energy sources online. So that's it. All right, well, let's wrap things up here and take a look ahead what we got coming down the pipe this week. These are your current levels, Dow, Q, and SPY. We went out on Friday. These are areas that I feel are like support and resistance. We are pretty close to support on some of these levels here. And yeah, so more pressure possibly to the downside. Economic events, we do have a lot of jobs data coming up this week. We've got jobs claims, non-farm payrolls, average hour earlier earnings. Monday we've got that ISM manufacturing PMI number. So, and as far as earnings go, again, pretty light week. We've got LW, Lam Research on the Wednesday, Constellation Brands, ConAgra, McCormick, and Levi on the Thursday, kind of most interesting day, and then Tilray pot stock on the Friday. So we'll see how things go. Anyway, let's wrap it up. Again, we're pretty oversold. May get a bounce next week, but again, we're in a bear market, so just be aware of that. And bounces are always suspect. So see you, everybody. Hopefully, we can join us in the morning. We start the pre-market show at 8 a.m. Eastern Time and take us right into the open 9:30 with our members trading the market open. So have a great rest of the weekend, and hopefully we'll see you on Monday morning. Bye for now.